Hello and welcome. You are watching World Business Report here on News 9 Live, where we get you all the latest from the world of business, economy, finance, technology, entertainment and more from all across the world. I'm Krishna Kumar. We begin with a tragic incident where 10 people lost their lives in a devastating mid-air collision between two Navy helicopters during a military rehearsal for a Royal Malaysian Navy parade. Reports say one of the choppers clipped the rotor of the other before the two crashed into the ground in the town of Lumut, which is home to a Navy base in Malaysia. With no survivors, the HOM M5033 carrying 7 individuals crashed onto a running track, while the Fennec M5026 with 3 victims plunged into a nearby swimming pool. In a stark revelation, a recent analysis by Climate Analytics unveils that none of the G7 nations are on track to achieve their emission reduction targets for 2030. The report, released just days before the G7 Climate, Energy and Environment Ministers' meeting in Venaria Reale in Italy, indicates that existing policies may only deliver a fraction of the desired outcomes. Despite collectively aiming for a 40 to 42% reduction, projections suggest that the group may only achieve a modest 19 to 33% reduction by the end of this decade. This shortfall not only jeopardizes the goal of limiting global warming to 1.5 degrees Celsius, but also signifies a major leadership gap among the world's most prosperous economies. To bridge this gap, experts have urged the G7 to intensify efforts, calling for a 58% reduction in emissions by the year 2030 compared to the 2019 levels. The call to action extends beyond emission cuts to include increased climate finance, the phasing out of fossil fuel subsidies, and ramping up renewable energy and energy efficiency initiatives. The urgency of the matter is underscored by the looming threat of climate extremes, necessitating bold and immediate action from the G7 nations. Meanwhile, China's Guangdong province is reeling from severe floods triggered by unprecedented rainfall, raising concerns about its defenses against extreme weather. The densely populated Pearl River Delta, prone to summer floods, now faces a crisis as heavy rains have inundated the region, overwhelming all the previous defenses. Rescue efforts are underway to save those trapped by the rising waters, with tens of thousands already evacuated. More in this report.
China's Guangdong province has been hit by severe floods following record-breaking rains, sparking fears about the region's defences against bigger deluges induced by extreme weather. The area, situated in the densely populated Pearl River Delta, is prone to summer floods and has previously put in place strong defences to limit the fallout. But since Thursday, the region has been battered by abnormally heavy, sustained and widespread rainfall, bringing the wet season earlier than expected. Rescuers race to save the many people trapped by floodwaters. In some regions, houses have been submerged up to their upper floors. Tens of thousands have been evacuated. Huang Jingrong is a farmer in the region.
I used to plant rice here, but now it's all flooded beyond repair.
The state-owned news agency Xinhua reported some fatalities and a number of people missing. China's weather has become increasingly more intense and unpredictable, which scientists say is due to global warming. Many rivers remained swollen on Monday at levels above safety thresholds. Rains are expected to affect Guangdong for the rest of April.
Now, in a move reminiscent of Apple's Wallet app, Google has quietly introduced its own Google Wallet app in India. While some users have reported being able to download it, others find it missing from the Play Store, indicating a limited rollout. Despite the Google Wallet app's availability to select users, Google has yet to officially confirm its launch. The Google Wallet app functions similarly to its counterparts, enabling digital payments via phone or wearable devices and storing cards, tickets, and passes. And keeping it with Google, in a wave of layoffs, Google reportedly fired over 20 additional employees following last week's termination of 28 workers amid sit-in protests over the company's $1.2 billion cloud computing project with the Israeli government. The protests, spearheaded by employees critical of the projects, have now led to nearly 50 dismissals. According to a spokesperson from No Tech for Apartheid, those fired were deemed non-participating bystanders. Google's head of security, Chris Rakow, condemned the protests leading to the initial terminations. CEO Sundar Pichai underscored the importance of persevering open dialogue while cautioning against disruptive behavior that undermines workplace safety and productivity. Venezuela's state-run oil company PDVSA is turning to digital currency for oil exports as the US has reimposed sanctions on the Latin American nation. With a May 31st deadline to wind down transactions under expired licenses, PDVSA is speeding up its shift to digital currencies like USDT to reduce the risk of frozen proceeds. The move comes amidst a preference for the US dollar in global oil markets, although cryptocurrency payments are becoming more common. PDVSA's oil exports have surged under Minister Telechia, reaching 900,000 barrels per day in the month of March, aided by US licenses. While reliance on middlemen could help skirt sanctions, it may also reduce PDVSA's revenue. Despite challenges, the Minister for Oil Resources of Venezuela, Telechia, remains confident in PDVSA's trading capabilities to navigate the return of US sanctions. Away from that, Tesla has responded to mounting competition in the electric car market by slashing prices in key regions like China and Germany. This move follows recent cuts in the US, signaling a strategic shift amidst falling sales. This report tells you all about Tesla's new pricing strategy and its impact on the global EV market.
Tesla is slashing prices in key markets, including China and Germany, as it faces increasingly stiff competition in the market for electric cars. That follows price cuts in the US last week, and a report by Tesla's billionaire CEO Elon Musk this month that global vehicle deliveries in the first quarter fell for the first time in nearly 4 years. Musk posted on X on Sunday that, quote, Tesla prices must change frequently in order to match production with demand. Tesla's website showed on Sunday it had reduced the price on some of its models in China and Germany by around $2,000. A Tesla spokesperson said there were also cuts in other countries across Europe, the Middle East, and Africa. Tesla has been slow to refresh its aging models as high interest rates have worn down consumer appetite for big-ticket items, while rivals in China, the world's largest auto market, are rolling out cheaper models. Musk said last Monday that Tesla will lay off more than 10% of its global workforce as the automaker braces for its first annual drop in deliveries. The company's shares have fallen by over 40 points so far this year.
And in China, Huawei's latest phones boasting homegrown chips have been hailed as a testament to China's technological prowess. However, the US sees them differently. Washington asserts that these chips are evidence that its restrictions on semiconductor supplies to China are indeed effective.
They were the subject of patriotic acclaim in China, but Washington says the Chinese chips in Huawei's latest phones are actually evidence that its curbs on supplies to the country are working. The Mate 60 handset debuted last year, powered by an advanced locally made chip. Last week, the phone maker unveiled new models thought to use an upgraded version of the silicon. The chips are reportedly made by China's Semiconductor Manufacturing International Corp. In Beijing, that's been cast as evidence of the country's ability to overcome restrictions on the supply of advanced semiconductors. Over the weekend, US Commerce Secretary Gina Raimondo said the reverse was true. Speaking to CBS, she said the Chinese chips were nowhere near as advanced as the latest US models, and hence proof that the supply curbs are working. Huawei has been on a Washington blacklist for years. That's over allegations that it could help spy on Americans, charges the firm strongly denies. Restrictions have also been imposed on Chinese semiconductor manufacturers. The Biden administration says it continues to evaluate whether Huawei's new chips have violated export rules.
Meanwhile, former US President Donald Trump departed a Manhattan courthouse, marking the start of his unprecedented criminal trial. The jury was presented with opening statements focusing on hush money payments to a porn star. This report tells you more.
Donald Trump left a Manhattan courthouse after the first day of his historic criminal trial Monday, when the jury heard opening statements about hush money paid to a porn star. Prosecutors said the former president broke the law and deceived voters in the 2016 election by trying to cover up sexual encounters with adult film actress Stormy Daniels and Playboy model Karen McDougal. Trump's defense attorney told the jury that his client committed no crime, adding, quote, "There's nothing wrong with trying to influence an election. It's called democracy." Trump is charged with falsifying business records to cover up a $130,000 payment to Daniels in 2016. To keep quiet about a sexual encounter she says they had 10 years earlier. Trump has pleaded not guilty and denies the encounter took place. Prosecutors said on Monday that Trump disguised payments to his personal lawyer Michael Cohen as legal services, when in fact they were meant to reimburse him for paying off Daniels.
Cohen is a lawyer, represented a lot of people over the years. Now, I'm not the only one. That checks being paid to a lawyer. He is a lawyer. Or was a lawyer, and also the things he got in trouble for were things that had nothing to do with me.
Jurors also heard briefly from the prosecution's first witness, former National Enquirer publisher David Pecker, who prosecutors say participated in a catch-and-kill scheme to suppress unflattering stories about Trump and help him get elected. He is expected to return for more questioning Tuesday. The hush money case may be the only one of Trump's 4 criminal prosecutions to go to trial before the November 5th election. A guilty verdict would not bar him from taking office, but it could hurt his candidacy, as Reuters Ipsos polling shows half of independent voters and 1 in 4 Republicans say they would not vote for Trump if he is convicted of a crime.
Now, breaking a streak of declines over the past 6 sessions, Wall Street bounced back with the S&P 500 and the Nasdaq surging ahead, driven by a number of factors, including re-evaluated expectations on interest rate cuts, robust U.S. economic data, geopolitical tensions, lingering inflation concerns, and insights from the U.S. Federal Reserve. This Reuters report gets you a detailed lowdown on all the action on Wall Street.
U.S. stocks bounced back on Monday after multiple sessions of sell-offs as investors eyed key corporate results this week that should provide more insight on the health of the economy. The Dow gained nearly 0.7%, the S&P 500 nearly 0.9%, and the Nasdaq climbed more than 1%. Prior to Monday's rebound, geopolitical tensions and investors' rate cut reevaluations in light of hotter-than-expected inflation and jobs data contributed to a 6-session decline by the S&P and Nasdaq. Markets are now gearing up for quarterly results from some of the so-called Magnificent Seven big tech companies this week, including Tesla, Meta Platforms, Alphabet, and Microsoft. Lisa Schreiber is investment analyst at Gradient Investments.
We are at the point where I think it's the most important earnings season for big tech now, because expectations are so high and because they are raising concerns and questions if they can keep up their performance, if they can keep up their deliveries, or if we saw weakness actually and what they're guiding going forward.
Shares of Alphabet, Amazon, and Apple gained between 0.5% to 1.5% on Monday. Nvidia jumped more than 4% to rebound from a 10% drop in the previous session. But Tesla shares dropped nearly 3.5% as the electric vehicle maker cut prices in a number of its major markets, including China and Germany, following price reductions in the United States. Investors this week will also be closely watching Friday's key personal consumption expenditures, or PCE report, the Federal Reserve's preferred inflation gauge, for clues about the central bank's monetary policy path.
Now, amid the intensifying competition in the global electric vehicle market, China's state planner has predicted a fierce price battle among electric car and plug-in hybrid automakers in the coming year, citing excess supply and other factors. And that's according to a statement released by a government body of China.
An electric vehicle price war shows no signs of ending, according to China's state planner. The National Development and Reform Commission said it expects an intensified price war among automakers of EVs and plug-in hybrids this year. It sees more than 110 new energy vehicle models coming in 2024, ramping up competition. The state planner also estimated the market demand for NEVs to grow by 2.1 million units. However, the three top NEV brands in China had planned to raise deliveries by 2.3 million units, signalling oversupply. It also said falling battery costs and economies of scale will be the other two main reasons for lower prices in NEVs. BYD and Denza cars have been leading the price cuts. They brought in reductions of around 7.1% to 9.7% to the prices of 5 models in April compared with the start of the year. Li Auto cut prices on 4 of its models, following similar moves by Tesla and BYD.
In a bid to drive prices upwards in the food industry, companies are warning that the implementation of physical checks at UK's border control posts, coupled with increased charges beginning the 30th of April, will hamper the availability of a diverse range of fresh artisan foods, including cheese, pasta, and olive oil.
An upmarket food store in London makes for an unlikely front line, but shops like Panzer's Delicatessen say they feel under attack by bureaucrats. 3 years after Britain left the EU's single market, new border control checks are due to begin at the end of the month. Deli boss David Josephs says that's going to make an already bad situation worse.
It's created bureaucracy, a huge range of bureaucracy. A whole empire has been built as a result of Brexit, which is totally uncalled for. We now have to register paperwork 24 hours to 48 hours in advance of shipping, whereas before we could have it within hours and just ship the goods.
EU exporters of many foodstuffs and other products already have to provide health certificates for their produce. That may not be a problem for big firms importing in bulk, but smaller UK retailers say it can delay the arrival of goods by weeks and make little orders all but impossible. From April 30th, the products will also be subject to physical checks at border posts. The government says that will help stop diseases and pests entering the country, but many retailers fear it will just add to delays. Italian food dealer Nick Carlucci says some meat importers have told him it may not be viable to keep supplying the UK, and he says there will be another impact too.
Unfortunately, we do have to pass on the costs. We can't absorb all these costs that just keep coming out of thin air. We do our best to absorb as much as we can, but we have to pass it on to our customers, which are farm shops, food halls and delis, and unfortunately they have to pass it on to the final consumer.
After the new checks come in, he says importing one pallet of varied meats will cost an extra £432 or $537 compared with before Brexit. He says the costs could hammer his profit margin by 10%. Now his firm is stockpiling, afraid of bottlenecks at key gateways like the port of Dover on the south coast. However, the government says it will take a pragmatic approach and says it does not anticipate major disruption. Ministers estimate the new rules will increase food inflation by just 0.2% over 3 years.
Britain's third biggest supermarket group, Asda, announced a 24% rise in annual earnings. This surge reflected a robust over 7% growth in total sales alongside a reduction in the company's debt. This report tells you more.
Asda's annual earnings rose by just under a quarter. The British supermarket group said Monday total sales went up 7.1% and it had also cut its debt. Its key profit measure hit $1.33 billion and total sales of about $27 billion excluding fuel. However, monthly industry data has shown Asda consistently underperforming bigger rivals Tesco and Sainsbury's. Data from market researcher Kantar, published last month, showed the chain had a 13.8% share of Britain's grocery market. That's down 50 basis points on the year. Asda has been hurt by finance costs due to high levels of debt since it was bought out from Walmart control. Its new owners are brothers Zubair and Mohsin Issa and private equity firm TDR Capital, although the US retail giant still holds a 10% stake. Asda said its net debt at the end of last year was just under $4.7 billion, adding it was committed to cutting that number.
Israel's claims of United Nations Relief and Works Agency staff ties to terrorism remain unsubstantiated, raising questions about the neutrality of the agency. A recent review cast doubts on these accusations impacting funding freezes from donor countries.
Israel has yet to provide evidence for its accusations that hundreds of staff within the UN Agency for Palestinian Refugees, or UNRWA, are members of terrorist groups, according to a review of the agency's neutrality released on Monday. The review also noted that UNRWA has a, quote, more developed approach to neutrality than other similar UN or aid groups, according to Catherine Colonna, a former French foreign minister appointed by the UN to lead the review.
There's always room for improvement, and some issues related to neutrality persist. This is why this mission was created.
Colonna was tasked with the review after Israel accused 12 UNRWA staff of taking part in the Hamas-led October 7th attacks that triggered the Gaza war. A separate probe by internal UN investigators is looking into those allegations. 16 states paused or suspended funding to UNRWA after Israel raised the concerns, a severe blow to the agency that provides education, health, and aid to millions of Palestinians in Gaza, the West Bank, Jordan, Lebanon, and Syria. The review said UNRWA shares staff lists annually and that Israel had not raised any concerns with UNRWA based on those lists since 2011. Israel then stepped up its accusations in March 2024, saying over 450 UNRWA staff were military operatives in Gaza terrorist groups. A spokesperson for Israel's foreign ministry on Monday accused more than 2,000 UNRWA workers of being members of Hamas or Palestinian Islamic Jihad, and said the review of the agency was insufficient. Colonna said she wasn't surprised by the reaction.
I wanted to know that we have had good relations with Israel. We were received really well by a wide variety of actors there, including officials, several levels and in several domains. I just briefed one of those contacts we had there, and I'm not surprised about what we say because I told him, of course you will find it is insufficient, but please take it on board. Whatever we recommend, if implemented, will bring good.
The review said UNRWA neutrality challenges included the size of the operation, with most personnel being recruited locally. It included some staff publicly expressing political views, textbooks with problematic content, and politicized staff unions making threats against management. A spokesperson for UN Secretary General Antonio Guterres said he has accepted the recommendations and is calling on all countries to actively support UNRWA as it is a lifeline for Palestinian refugees in the region. A U.S. State Department spokesperson said the United States had received the report and is reviewing it.
And with that, wrap here on this edition of World Business Report. Thank you so much for watching. This is Krishna Kumar signing off.